of travel for the day, it would appear that ding, 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 first day in a long time that we've got Brent trading above $80 a barrel, which if you're sitting in the Persian Gulf or the Arabian Gulf or whatever Gulf, perhaps it doesn't matter. There's oil in a lot of different Gulfs, and there'll be a lot of happy smiles with that number printed and holding firmly above 80 moved. We're now at 80.50. So the day has arrived. We called it on this show earlier this month when our surveys told us 60% or so that we would hit $80. And here it is. Let's kick off this morning with Mark Ostwald, Chief Economist and Global Strategist, ADM Investor Services International. Mark, how have we been suddenly caught in a supply shortage, or is this indeed just one of those bottlenecks that have blown up with Ida and it too will pass?
I think this has been building for a long time. It's a combination of factors. Yeah, Ida is an aspect of it, and that's really sort of a case of dotting I's and crossing T's. It's the straw which broke the camel's back. But these infrastructure issues related to power supplies and the whole game that OPEC's been playing, and the whole underinvestment that's been going on ever since the first big oil price crash of the recent era, i.e. in 2014. It's cumulative, and we've not been prepared for it. I rather suspect that the so-called transitory aspect is not going to be as transitory. I still think, nevertheless, we probably are going to be in for a lot more volatility in both energy and other commodity prices, simply because there is too much money floating around. And we do know that amongst the world's investing fraternity, some of them very short term, the desire to chase momentum trades is always very substantial.
Let's flick across to the exotic suburbs of San Diego with Richard Redoglia, CEO of Matrix Global Holdings. Richard, good evening, good morning here in Dubai. Yeah. But ultimately, is this a question of having shifted to a supply shortage, or is this a demand issue? We've kind of waddled between glass half full, glass half empty, when the focus has been on demand recovery. Where do you see this leading? Is this a demand recovery, or are we in a shortage equation? Supposedly OPEC Plus still has 5 million barrels to pull out of its hat.
I think it's a combination of both. I think it's really the new world order in my mind. We talked about this 6 months ago, where we talked about OPEC Plus and Zoom meetings. I think we've seen something remarkable here in my history of watching markets for decades, that we now are understanding demand in real time. We've never seen in history a market in backwardation where year over year demand is lower than the prior year, and we're there. How is that possible? It just doesn't occur, right? It occurs for a reason. It occurs because OPEC wants it to happen. And it also occurs that the OEC politicians on the green woke side believe that they have the best path forward. And when you pick those two things together and you say to OPEC, we don't want your oil in 6 years, and then you say to OPEC, you're in charge of the marginal barrel production, you get a market that is in backwardation. And it's not just in backwardation, it's getting into extreme backwardation. I'm looking at the 1 to 36 month spread right now, and Brent is $15.60 backwardated. So you get to a situation, not only do you go into backwardation, but you prevent a marginal producer to come online and hedge forward. So you get a dynamic that is controlled by those who produce the cheapest oil in the world, and we all know where that is.
Let's welcome Frank Kane, because that's where it is. Senior business columnist, Arab News, the largest English language daily newspaper in Saudi Arabia. Frank, is there any appetite within the OPEC Plus, within the Saudi Arabia as the leader of OPEC Plus, to somehow try and curtail this rise in oil price in fear that it may kill the golden goose of the global economic recovery?
Go on. Hello. Hi, everyone. Well, do you know, they have a plan, and I think that they're going to stick to it. You know, there's an OPEC Plus meeting next week, where I suppose they could do something. They don't, you know, they don't have to stick to this 400,000 a month, but that is the plan. You know, they don't like changing their mind, or at least Prince Abdulaziz bin Salman, the Saudi energy minister, likes to stick to the script, and this seems to be what's in it. So I don't think that they will try to pull prices down particularly. You know, they have a strategy, and so far it's worked pretty well for them, and you know, for the rest of the OPEC Plus people. Saudi's in quite a sweet spot at the moment, isn't it? Because it has all this capacity, it has rising prices, it has rising output over the next year. Within the deal that brought us to 400,000, there is some leeway. You know that there are months where they don't have to put oil back on. You know, because it's gauged towards the end of next year. If they keep on with 400,000, it could reach that in September. So there is some flexibility within it, but I don't think they will, you know, do anything certainly in response to White House calls to do something about prices. I don't think that's a factor. You know, really.
Well, on that point, Mark, I mean, OPEC Plus did make a commitment to add 400,000 barrels a day. They are not doing that. They didn't do it in August. It's a very unlikely. The data is showing that they've done it in September, due to the fact that there's a number of countries within OPEC Plus that are unable to meet their production quotas. Would OPEC Plus be wise to cover at least those barrels to meet the commitment they've made of 400,000, wherever they come from?
I think probably yes, because we're in a situation now where we've got inflation pressures in all the wrong places. It's all in the non-discretionary area: energy, food, housing. That is calamitous. And, you know, it's the sort of thing which can bring the world economy to a bit of a grinding halt. So really, it's about the internal politics of OPEC Plus. You know, we know that Saudi is always the balanced producer. We know that as much as Russia can, or has the quota to produce more, it's just not doing it. So someone is going to have to step into the breach, and it's most likely to be Saudi. I would guess the UAE will not be far behind in taking up the baton. Obviously, there is some care. They don't need to flood the market. And obviously,
well, simply meet the data point that they already identified themselves, which is simply a measly 400,000 barrels.
Yes, exactly. But you know, the supply issues are, you know, what we're basically is getting everything from A to B at the moment, and we're not very good at doing it, because basically everything that was there in terms of just in time has been blown up. I mean, yeah, that's to put it very simply. We don't seem to have the capacity to deliver from A to B in a lot of cases. So it is wise, I think, particularly given that some of these bottlenecks are, you know, wherever I look, they're not going to go away in any hurry. You know, at least into the middle of next year. I would have thought actually well into probably the end of next year. And this is one which we really, really don't need it, because prices are going to remain high simply because there are shortages of everything everywhere.
And Richard, on that, I mean, energy prices, we've got the gas price short at record levels, obviously oil now popping above 80. Where do you see the correlations between these? Do these feed each other higher? One cannibalizes the other?
Well, I think that's exactly right. I mean, I just saw Netherlands had the highest price in history. Electricity price in Britain, 7x of where they were last year. We're seeing US natural gas prices high. There's going to be substitution. Well, what do you substitute? Well, coal is evil, so you can't really want to start running coal because that'll destroy the world instead. So you use fuel oil. Well, where does fuel oil come from? Right? So you end up using fuel oil in heating. and that becomes another push towards it. We're even in an economy where they're going to sell more cars. If 3% of the new cars are Teslas, who cares? It doesn't really matter because 25% are Ford 150 trucks. And so we really leave ourselves in a bind. And I think COVID, and I don't mean to say this disrespectfully, has been good for OPEC. It's allowed them to do things they've never done before. They meet, as we saw last meeting, the shortest meeting on record. They rubber stamped a number. The MBS, whoever the other leader was probably a false flag that they had a disagreement about something, and they had a kerfuffle about production was going to be. Well, that didn't lead to anything. It led to a 400,000 barrel increase. How long is it? As you just said, they're not really meeting it because Nigeria and other African countries can't. And then we just saw, it's not coincidence. Everyone's talking their position. Vitol, Mercuria, Trafi, everybody's saying prices are going higher. Let's just guess what their positions are right now. When they start talking it up to 150 bucks, when they start talking 150, then it's time to get short because then they're going to want to get everybody in. But we're not there yet. And so I think what we really have is the culmination of green policies causing less natural gas production or power to be produced, with wind power not producing the kind of power they want, which causes natural gas prices to rise, which causes fuel prices to rise, which will cause crude prices to rise. But I think this is the merry-go-round we're on, and I don't think we're getting off it anytime soon.
John,
Frank,
can I just make a point there?
Please, yeah. Jump in.
Because the move to $80 coincided with this report from Goldman Sachs that came out yesterday. And the surprising thing about that, it seemed to me, was the extreme optimism about economic recovery. From that report, the Delta variant is beaten. The only way is up. And I'm not sure that this gels with the actual economic reality, that we've seen from the IMF and from others who still warn about the ongoing effects of the pandemic. But Goldman Sachs is certainly, and others too, indeed. JP Morgan came out with something similar last week, talking about $100 super cycle spike. Goldman going for $90 by the end of the year, all on the back of demand. This is all a demand factor for them, it seems to me.
But just one point there too. I think it's also a function of, I think, super aggressive Fed and other countries. It's the acceleration of money printing and the idea that we're going to print another $1 trillion here and there. So I think I would imagine these Wall Street banks are saying,
yeah, sure,
go for it. The economy is going to continue to boom. It will be demand led. I just don't want to be around when this all comes apart. That's just my fear. Right? What are we going to do?
Mark, your thoughts on that point. How does the Fed read this from the point of view you've mentioned in your earlier comment that the signaling that this inflation, that at these elevated levels for food, energy, housing, these are not temporary data points. And so I'm curious, from your point of view, how should the Fed and monetary policy makers read these prices and their impact on the economic recovery?
I think they've got a big problem. They are in what they've all said we're going to be reactive. We want to see the proof of the pudding of the global recovery. And now what we've got is a situation where precisely the elements of inflation that they can do nothing about, food, energy, housing, that's all government things. The governments deal with those sort of problems. Monetary policy is absolutely toothless in the face of that. So what they've got now is a situation where, yes, it's good to actually, they do doubt the strength of the global recovery, and that's why they're being even more cautious. So they were reactive, and now they're so afraid of making the wrong step that they're probably going to let this run away with itself. But to be honest, would, in the face of food, energy, housing price pressures, what's a rate hike going to do? It might do something on the housing side, but doesn't seem to be much evidence of that in the US. Yes, it would probably be good to withdraw some of that stimulus in the US, but as we're going to see later, you've got housing prices up 20%, rents up well over in the region of 10 to 15%. And it's pretty much the same story anywhere else you look around the world. The problem is what we've got is all this monetary largesse is not the solution to the problems, because the problems are that COVID has highlighted how we haven't used technology properly. We've not invested properly. We've just used it as a convenience. And so we're now actually basically having the emperor's new clothes exposed, if it would be my way of expressing it.
Richard, we were all, I think there was more or less consensus that the lack of CapEx investment last year with the crash of oil prices, infamously minus 40 on WTI, over 30% cut in CapEx investment in new production capacity. And that problem was generally seen as a 2023 medium-term problem, not something. Have we already arrived into that problem?
I think so.
Given that OPEC plus Saudi, Kuwait, UAE supposedly have a few million barrels in the bag.
Well, I think you're absolutely right. I mean, it's not just the lack of investment to me. It was the collapse in the weak hands, and it really is when you collapse the market so rapidly in 2020. It was already starting. The Permian debt players were already getting pushed out. And what we had really was a full sale washout. That washout is similar to 1985, 85, 86, when the market went from $30 to $9. And it wiped out every Texas bank. It wiped out every independent producer. But what it did was it made the oil companies say, gee, we better pay attention to how these derivatives trade. We need to learn to hedge our risk. Let's do that next time. Well, now here we've come 35 years later. We wipe out the MLPs in the Permian Basin, and who takes over? ExxonMobil, P66, and Chevron, and they control the production now. So they've taken their investment, they put it in the new North Slope, effectively, which is now called the Permian. They built an 800,000 barrel pipeline to the refinery. Why invest anything? Why push the marginal barrel? It was the marginal barrel production that forced OPEC into the Vienna Agreement, in my mind. That was the push. And now which is only 5 years ago, but think in the last 5 years, think how fast information technology is working now. These guys are watching demand in real time. At the same time, every politician in the world is telling them that oil is evil. It's not rocket science. If someone's telling you what you're going to sell is going to be valueless in 10 years, you're going to say, okay, let's see what I get for it in the next 5 years then. And you tell me what you're going to do. And I think that's the battle we're in.
Frank, on that point, fairly spectacular results announced yesterday by ADNOC in their IPO of their oil drilling unit. They were floating. They were looking to raise 1.1 billion. They attracted $34 billion. If that similar oil drilling unit X was floated in New York or elsewhere, it seems unlikely it would have had that kind of reaction. Your thoughts on the performance of this IPO? What does it tell you about where things may go regionally?
Yeah, it certainly was successful, wasn't it? I think that's probably the most oversubscribed in the history of.
That's incredible.
Yeah, and it's the biggest IPO in Abu Dhabi ever as well. But look, ADNOC have done this pretty well. They floated the distribution business a couple of years back. That pulled in a big premium too. They have a history of this. They're obviously well advised. And there could be other parts, couldn't there, at ADNOC? Certainly Saudi Arabia is looking at this too and watching and learning. Aramco are thinking about further, maybe not IPOs of their core businesses, but certainly joint ventures with financial partners. The Aramco gas pipeline business, could be a suitable case for that sort of thing. But you're right, Sean. You know, an IPO like this wouldn't have attracted that same premium in London or New York. But you know, isn't that the way it's going? You know,
I suppose it's a reflection of the move of the center of gravity in the.
Yeah, I think you're right. Yeah, it'll be interesting to see how many Asian QFIs, qualified financial investors, took up shares in that. As opposed to Western ones. I haven't seen those figures yet, but that would be interesting to see.
It'll also be interesting to see if this company positions itself to work overseas beyond Abu Dhabi and what muscle that may have. Mark, perhaps the most concerning article in our digest today is from the Chinese Global Times, which of course is the mouthpiece of the Chinese Communist Party. It is a newspaper that is very much inside the family there. And it is warning that China's power supply is to tighten this winter. And they are forewarning factory closures, and insiders predict the situation could worsen. I mean, for the Chinese Communist Party newspaper to put out headlines and content like that, one should stand up and take notice.
Oh, without a shadow of a doubt. China is now, people are thinking that there's a lot of proactive things being done by the Chinese government. In a lot of senses, they're actually discovering, just like we are, that they haven't planned sufficiently. But the power supply problem is a familiar one. It's also the same sort of problem that Brazil has. You know, they've been too reliant on, you know, one, they've been trying to manipulate all the various commodity prices, metals, energy, food, agriculture, and they're in a situation now where they get something under control and the problem springs up elsewhere. You know, they've got reasons, the normal ones, which are for pollution in winter, to curbing power supply. But this is way beyond that. This is basically due to, you know, they're having to rely more on coal simply because the gas price is too high. It's that spillover effect that Richard was talking about earlier. You know, we just keep on, one feeds into the other, and the Chinese are actually finding it a bit of a nightmare, as everybody else is, to be quite honest. But you know,
go ahead. Sorry.
But you know, it is a concern, and it comes at exactly the wrong moment because the Chinese economy has clearly lost a lot of momentum, and the only thing which was actually keeping it going well was the industrial production side. You know, consumer side is weak, as I've said many a time before.
Are we seeing, Mark, the ingredients and perhaps the evidence of the emergence of stagflation, where, as you say, the Chinese economy is declining? The recent reports on the US economy is revising down the growth expectations, and yet inflation continues to rise and bed in. Higher prices, lower growth. This fear that the Fed was fighting earlier in the year.
I'm not sure about the stagnation part.
Stagflation.
Yes, no, but the inflation pressures there. The stagnating economies, I don't think so. I think what we've got is a case of, we've got the supply chain problems. It's basically, what we're going to get is a slower growth recovery than we've been expecting. I still think that's actually, in the longer run, a good thing. But with all these supply chain problems that we've got, the risk of an inventory buildup, hoarding, because people are struggling to think, is very large. And therefore, the bigger risk, I think, at the moment, is we get an inventory bust as and when things start to normalize, because people will have hoarded too much. I think that's by far the bigger threat for the global economy. And it is a case everywhere.
Interesting. Let's get the survey question in and see what the room's view is on OPEC. Given they are meeting October 4th and they are not meeting production quotas, should OPEC plus states with spare capacity boost oil supply to cover for member countries failing to meet production quotas in order to stop the market from overheating? those that have the capacity should increase because those who are others are unable. Yes or no, should OPEC amend their agreement, not to above 400,000, but amend the agreement to allow others to pick up the slack in order to keep things a little bit under control. Richard, your thoughts on that strategy, if indeed it is necessary? Should OPEC Plus even feel obliged to do so?
No. Why should they? I mean, I think that the fact that we saw 34 billion, I had not heard that. That is remarkable. You know, just remember, 6 years ago, this is the kind of money going into the MLPs in the Permian, right? Those are the billions of dollars that people were putting into it. Now the largest private equity firms, they tout their ESG. They say they're divesting of all of energy. I think the OPEC Plus nations don't owe anybody a whit. So I think this is a market. Be a big boy. You want to play the game? Let's play the game. And I think, you know, will it lead to a problem? I mean, their biggest problem, you said it, is a worldwide recession. Well, I remember prices at $140, you know, and with money being printed and everything that was going, and that caused part of the collapse. I don't think we'll get to something like that. But remember, at $140, Goldman called for $200. So I think what OPEC Plus is doing is the right thing. They will monitor it. And again, this is a once in a lifetime situation. The market is in backwardation and demand year over year is lower. Again, never happened. And this is at a time, remember, when US production is 10.6 million barrels a day. So I think the real fear is, and maybe we can talk about a year from now, what happens when demand worldwide is 102 million barrels a day and OPEC production is at their levels? What's going to happen then? That's going to be the real question. If we think we have inflation now, that could be the real answer. So shortly, to answer your question, no. Let the market, they set the rules. They're going to use COVID and other reasons to maintain, take a strident view of what the market's doing to make sure they don't oversupply the market. I think they're doing the right thing.
Frank, just bringing it all home here to the Gulf, obviously the windfall of this somewhat unexpected price point on oil. Of course, it's not the average for the year, $80, but it will bring up the average to 70 or so.
We got 3 more months. We got 3 more months here, Sean.
Yeah, that's true. I mean, but it does feel like for the Gulf states and for the fiscal health of the region, this is obviously positive. How do you think it'll be used?
Well, they're loving it, aren't they? I mean, all the diversification plans, they suddenly make more sense. You know, the Saudi Vision 2030, the various diversification strategies in the UAE. And they can spend money on other things like, for example, Expo, Sean, can't they? Which, I mean, living in the middle of Expo land here, it all kicks off on Thursday. That's, you know, a considerable amount of investment has gone into that. They are putting great store in it. You know, they hope it will give a big boost to the Dubai economy in particular. That will have long-term beneficial effects. But there was always the suspicion that, you know, that the cash required, you know, that wasn't the best use of resources. Well, maybe now they can rest a bit easier on that. You know, they have a few more in the bank. You know, whether Expo will have this long-term effect, I don't know. There was quite a sobering piece out last week from Capital Economics that seemed to suggest that most of the positive effect would fade away come next spring, you know, when the supposed 25 million visitors leave. But
let's hope they arrive first.
You know, they have changed this over recent months. You know, it was always 25 million visitors, and now it's 25 million visits. You know, which seems to suggest a lot of Emirati school children will have multiple visits. It seems to me.
Not only the Emirati ones, I'm sure all of the schools. I'll go a few times myself. You know that I certainly intend to. It's a bit like the views on a tweet, right? How many views does a tweet get? Let's get the survey result and give Mark the last word this morning. An overwhelming yes. OPEC should cover. OPEC with should cover for OPEC without, and keep this party going. Ultimately, why risk it of toppling over? Mark, I welcome your thoughts on that result, but also in the US, there is the usual dramas going on in the debt ceiling. Will it or won't it be extended? It seems unlikely that the federal government of the United States would commit suicide, but any chance of that being an issue to be concerned about?
It's certainly something which we're going to be concerned about, because we're coming up against this relatively hard deadline. The actual problems don't occur until the end of October in terms of what they can manipulate. Yes, it is a problem, because the US government, particularly since the withdrawal from Afghanistan, you're suddenly seeing all the divisions on both sides of the house, suddenly bubbling up, and we're getting into this gridlock on Capitol Hill, which is a major concern, particularly with the world facing so many problems. So I think that is, we are going to be worrying even more about US politics, and this debt ceiling issue will be one aspect of it, particularly given there was so much hope around the infrastructure spending bill earlier in the year, and that's getting gridlocked as well.
Well, I would agree with you there. I think we've said it here before. As we get into the vortex of the U.S. next election, we're never too far away from the next U.S. election, given that they happen every 2 years, and the midterms now start to come into focus, and all of this poison surface. So if you're going to have an invasion of the Capitol Hill on January 6th, you have to figure the debt ceiling in itself could also be something that is facing new challenges than before. You can't rule anything out ultimately. So everybody probably needs to watch that space. So that's a wrap. Just to flag, later this morning, we're going to have our own APEC workshop with focus on Fujairah. So please join us with Chris Bake and many others giving their views on all of these issues. But Mark, thank you so much as always. Richard from California,
Thanks, Sean.
Frank from Dubai, really appreciate your time and insights. Have a great day. We'll catch up with you every morning, 10:30. All the best.
Thanks, guys.
$80 oil, bing, bing.